Now, Mr. Rashesh Shah is the chairman of the Edelweiss Group, which is one of India's leading diversified financial services conglomerates with businesses ranging across wealth management, asset reconstruction, life insurance, general insurance, housing finance, MSME credit, and wholesale credit. Now, Rashesh Shah co-founded Edelweiss in 1996, which has since evolved into an organization providing a broad range of financial products and services to a substantial and diversified client base that includes corporations, includes institutions, and individuals also. Edelweiss today manages customer assets of more than 2.6 Indian rupees trillion and services nearly 2 million clients. So that's a huge number. Now, this company has been built over a span of a few 25 years only. Edelweiss today has more than 9,000 employees, which are working out of more than 300 offices spread across India and overseas also. In the journey that Edelweiss has had, Edelweiss has grown from an equity base of rupees only 1 crore rupees in 1996 to the current equity base of more than rupees 8,000 crores. Now, Edelweiss has combined technology, innovation, and growth-oriented entrepreneurship with a strong focus on risk management to become one of the most successful, stable, and well-respected financial services organizations in India. Now, this success has been recognized through a variety of awards across the spectrum of financial services over the last several years. An MBA from IIM Ahmedabad, Rashesh also holds a diploma in international trade from the Indian Institute of Foreign Trade, New Delhi. A voracious reader, Rashesh is a fitness enthusiast and he plays tennis and is an avid runner also. Rashesh has participated in triathlons and continues to participate in marathons across the globe, albeit virtually in a pandemic affected world. Rashesh has an experience of more than 30 years in financial services. He is particularly enthused about the transformational role that financial services can play in translating India's vast savings into investments. He is also deeply involved in Edel Give Foundation, Edelweiss's philanthropy arm, providing strategic oversight and advice, and is particularly passionate about charities involving sports and education. A regular commentator on macroeconomic policies, development matters, and financial markets in mainstream and financial media, Rashesh serves on the boards of various companies and public institutions. He has served as the president of FICCI, which is India's apex industry association. He is also on the board of directors of the Indian Institute of Foreign Trade, as well as the executive committee of the Indian Police Foundation. He's also been a member of several government and regulatory committees, including the Insolvency Law Committee on the IBC. Rashesh has won several key awards over the years, including EY in the Entrepreneur of the Year Financial Services Award. So, in all, we have here Rashesh for you. He is right before you. And without coming in between myself and yourself, so let us hear what Rashesh has to tell us about the noble wealth creation. Mr. Rashesh Shah.
Uh, yeah, thank you, Arvindji, for your kind words and for this opportunity. And a very good afternoon to everybody. It's a great honor to be here. I think this is a great audience, a great participant list. And I'm truly very honored that I got a few moments out here to come and interact with you, to share our views, our story with all of you. So thank you, Arvindji, your entire team for putting this together, but also giving us an opportunity. You've been very kind. I always say that all the things I do, my passion far exceeds my capabilities. So I struggle in all the things I do, marathon, triathlon, but I'm very passionate. I'm just not as capable as I would like to be. So my capabilities are far shorter than my enthusiasm in all these things. But I think uh, I was very intrigued by the topic that you have, which is noble wealth creation, because I think we have all seen that wealth creation has always been a double-edged sword, and not just now. I think for hundreds of years, and that's why good corporates have had good values, and they have had charitable philanthropic activities. And there is a school of thought saying just creating jobs itself is the best thing you can create for society. And I also felt that I think we do a lot of awards for market cap, for profits, for all of that. But one of the things we need to do is to create to really reward companies for creating jobs, because I think the biggest social gift any company can give, any individual can give, is to create jobs for others, a good, productive, value added jobs. And I think that has been one of the things we are very grateful that we've got an opportunity to directly and indirectly create jobs for many people, create wealth for many people. But I must also be humble enough to admit that we are all part of the India growth story. Then I'm going to present the Edelweiss evolution within the India growth story that has been there. Can you see my screen? Is that visible?
Yes, sir.
Okay. So, as you said, Edelweiss started about 25 years ago. But I think I always say that we are a product of India. We've been very fortunate. I mean, I got a chance to study in IIM Ahmedabad, which is one of the leading management institutes in India. The fee was very low, so obviously somebody paid for all that. I and my wife both of us were batchmates, and then we got married after that. But we were very fortunate that somebody many years ago invested in building an institute like that, for which, for a very low cost, we got some world class education. So, and hence, I think we are all beneficiaries of things other people have done, and that has been our, I think, a responsibility all of us share. But as I said, first of all, I believe we are all products of India's golden age, and I think India's golden age continues. And it's been amazing for me that to see how this golden age of India is truly in front of us. And if I may just give an example, today our GDP is about close to $3 trillion. We are already sixth largest, and this is not on purchasing power parity. This is not on any other adjustment. We are already a $3 trillion GDP. We are the sixth largest in the world, and I think in the next couple of years we'll be fourth largest in the world. So already India has come a long way. I remember when I started my career 31 years ago, India's GDP was not even $200 billion. We have gone from $200 billion to $3,000 billion, $3 trillion. So India is already a very large country, though on a per capita basis we are very small. Our per capita is still only about 2,000 odd dollars, but we are already as an economy very large and very important in the world. But the important thing to see in that is we were a $500 billion country in 2000. In 2007, we became $1 trillion. And in 2015, we became $2 trillion, which means in the 8 years from 2007 to 15, we added one whole India's economy, which was there in 2007. So, and then in the next 5 years, we've added another $1 trillion. And now in the next 4 years, we'll add another $1 trillion. And by 2030, India will be adding $1 trillion to the GDP every 18 months, which means the size of India of 2007, which was also not a small country, will be added every 18 months to our GDP after 2030. And hence, I call this India's golden age of compounding is underway. Because in spite of pandemic, we are already close to $3 trillion. So we added $1 trillion after 60 years. We added one more $1 trillion after 8 years. Then we added 1 trillion after 5 years. Now we'll add one more trillion after 4 years, and then 3 years, and then every 18 months after that. And I think all of you understand finance a lot better than many people. You understand that compounding is very important, but compounding has three elements. One is we need size. So if I compound 100 rupees as a starting point versus if I compound 1 lakh rupees as a starting point, the impact of 1 lakh is a lot more than 100 rupees. The other thing I need is a growth rate. If I compound at 5% versus if I compound at 15%. And the third is the time, whether I compound for 10 years or 20 years or 30 years. So idea is have a good size, have long time, and have a reasonably good growth rate. And India has all three. We are already $3 trillion. We have at least another 20 years of growth ahead of us, given our demographics and our investment needs. And as I said, our per capita is still very small. So we have a lot of room to grow. And our growth rate also, even if we grow at about 6 to 7% a year, it is one of the highest in the world. So for the next 20 years, I think India has size, India has time, India has growth rate. And that is why I call this the golden age of compounding for India. So we are in the middle, we have been, and I and Edelweiss, we are all products of this golden age. But the golden age continues in spite of what we see in the papers and some, skepticism. I think India's golden age continues. If I go back and rewind 25 years and go to Edelweiss, how it started, I started my career in 1989. I graduated from IIM Ahmedabad and then joined ICICI. But around, as we remember, 92, there was this India's economy reforms. And I think part of the reforms we all understand well was what happened to imports and exports and industrial licensing and all that. But along with that, there was also a huge spate of reforms in the financial sector in India, because the way the government thought correctly at that time is you can't have your industrial reforms without financial sector reforms. And for over the last almost 30 years, we have seen a lot of reforms in taxation. All of you have been in the middle of that. There has been a lot of, the rate cap has been cut, FDI has improved, LPG has improved. But in financial services, if you go back and see, and I was very fortunate that between 92 to 95, a lot of reforms happened. Our capital markets got changed with NSE and online trading coming in, because the old stock exchange approach and the new stock exchange approach started in 93, 94. We got the mutual fund started in 93. Morgan Stanley was one of the first mutual funds to come about. We got SEBI was formed earlier. There was no SEBI. There was controller of capital issues in the finance ministry. Formation of SEBI also came about in 92, 94. We got a lot of FIIs investing in India. We got private sector banks like ICICI Bank and HDFC Bank started in 94. So mutual fund, private sector banks, SEBI, NSE, online trading, foreign investors coming in. It was, I consider, a very fertile phase of Indian financial sector. And as I said, we were just happened to be at the right place at the right time, because by then I had spent about a few years in ICICI, and I and my colleague from ICICI, a person called Venkat Ramaswamy, who is currently the vice chairman of Edelweiss, we, in our youthful enthusiasm, we said, with so much happening, there could be an opportunity to do something in financial services in India. And that is how we started 25 years ago. We come from very humble middle class background, so we didn't have a lot of capital. We are not part of any business group in India. So we started off with 1 crore of equity. There were only about two of us and one accountant and one peon. So there were four people. We had no assets, customer assets. Our book value per share, which is adjusted, was only about 10 paise equivalent. And very fortunate that our equity has grown to 8,500 crore. Book value is 74 rupees. Our headcount is now close to 9,000 people, and we have almost 3 lakh crores of customer assets. So it's been a heady growth. And still, when I look back and say, I can see a lot of things we didn't do right, a lot of mistakes we made, a lot of things didn't work out. But when you have such good tailwinds with you, when such kind of growth is happening in India, I think a lot of things fall in place. And we are just one of the examples of that, that we have to grab this opportunity, this golden age of compounding for India by the horn. We grab the bull by the horn and go out and build something. That is what we felt at that time. We feel even more today. After 25 years, we feel there are more opportunities today than we had even 25 years ago. And I think when we started, one of the fortunate thing was when I was in ICICI, we used to, I was in the export group. So I got a chance to work with a lot of IT companies. So as you know, at that time, companies like Infosys and all were just starting. And in fact, in 1992, Infosys was a client of ours in ICICI. Our group was handling the Infosys account. So we saw the new age entrepreneurs, the new business, the globalization of Indian business starting, and that itself was very, very insightful. And a lot of those core mantras we also adopted when we started Edelweiss. Our first thing was to be aspirational. Having seen new age entrepreneurs like these IT companies and the pharma companies, and as I said, being in the export group in ICICI, I got to meet a lot of new age entrepreneurs, and that is what sparked the entrepreneurism in all of us also. And idea was to be aspirational. We don't say we are ambitious, but we are aspirational. And I do say that you have, 1 year budget, 3 year target, but 20-year aspiration. And our aspiration was to build something of high quality, something that can outlast all of us, and something we are very proud of when we look back. Whether we make good money, bad money, more money, less money is not as important. But it's more important that we build a very high quality, aspirational, growth oriented organization. Our other mantra was growing, to grow in adjacent markets. So we started off as a investment banking company, then we added brokerage, then we added wealth management and asset management, then NBFC and housing finance, then insurance. So our idea has been that in financial services, there were a lot of opportunities open. 25 years ago, insurance was not there. 25 years ago, credit was not there. 25 years ago, capital markets were not there. But as all this have grown, and I call this in India, financial services have grown from one single lane highway to a 8 lane expressway that has got created. And one expressway is equity markets, one is bond market, one is insurance, one is credit markets, all of that, one is banking. So I think India has really evolved in financial services in the last 25 years. And our idea is that either same product to new customers, or new products to same customers. That is how we call adjacent markets. You either keep the product or the customer same and offer them a newer service as you go along. And we have grown with that. So that is how we are now in almost 8 businesses, from life insurance to general insurance to NPFC to housing finance to ARC to asset management and wealth management that we have. One of our other core mantra has been people, and people are always important. Everybody says people are the biggest asset, but in financial services, people are very important. And we try to foster a culture of partnership. A lot of the senior people were partners. We didn't want that old world culture of owner and everybody else is employees. So we gave a lot of equity to our employees. More than 20% of our equity has been shared with our employees through employee stock option plans and all. But more than equity, we truly try to build a culture of people are the first important thing, and invest in people. We spend a lot of money on training people, coaching them, building leaders and all of that. But idea was, if you invest in people, everything else will take care of themselves, because they will take care of customers and innovation and technology and all that. And that has been very good. I think one of the biggest things I'm very proud of the last 25 years, it's been the quality of people that we consistently have. And we hire a lot. We consistently hire a lot of people from outside, including bankers and all who have spent 20 years in a PSU bank. They come and work with Edelweiss, and we try to create a great platform for them, given their experience and their capabilities that are there. One of our other core mantra is learning. I think India is changing fast, but the world is also changing fast, and financial services is changing fast. And like after 25 years, we think we have to learn new things about technology, new things about customer needs, because they are changing all the times. So our organization, we have built it in a way, can we learn and relearn all the time. Like for example, one of the things we do is we have executive coaches for all of us, including me. So every 4 5 years we'll hire a coach for about a year, 8 months to a year, where you relearn new things so that you can constantly keep on evolving, because the world is changing fast. What had happened 40 50 years ago, what you learned in formal education could last you for the next 20 30 years. But now what you learn in formal education is good only for the next 8 10 years, because the world is changing so fast that in the next 8 10 years you have to learn again and again and again. I'm sure all of you are in this seminar also to learn. And I think learning has now become lifelong. And the day you stop learning is when you stop growing and you start decaying. So Earlier, it was much easier world where you put up a steel plant or a cement plant, or you have some asset, and the asset keeps on generating value for you. I think that those days are gone. Now, given the global competitiveness, given the change, given the VUCA world that we live in, ability to learn is one of the core capabilities for organizations, but also for individuals. And we invest a lot in that. And one of our last other mantra is we value EQ a lot more than IQ. Of course, like all of us, I think all of us are through the schooling system, we have the education system, each and every person in this seminar who's there, everybody who graduates and gets a good job, IQ has to be a given because IQ is how our school system is being trained for. But EQ, empathizing with people, being self-aware, managing other people, managing emotions. Because we, as I'm sure all of you have realized, that in work, in business, it's not just the IQ that counts. It's the relationships. It's the ability to manage other people. And all of you are leaders. You manage other people. That becomes very important. So we value a lot. In fact, a lot of the learning we do is on EQ. We hire very bright people, very high IQ people, but when we invest a lot in EQ, I wish we had a schooling system where in school itself, along with IQ, EQ was also taught. EQ and the qualities of EQ like empathy and self-awareness and emotional control and delayed gratification, all those are important parts of EQ that are also very important to be able to grow. And our last core mantra has been to invest back in society. We don't call it giving back. And as I said earlier, we've all been very fortunate for investments made by somebody else, and all of us have benefited out of those investments. So we have Edelweiss Foundation since the day we started 25 years ago. Our profits were very small, but we had decided that small part of our profit always goes back into investing into the society because we are all investors at heart. And our idea in Edelweiss Foundation is to invest for the society because what we invest, the returns are manifold to society as a whole. And for those of you interested, there is a lot of information on Edelgive, but we support a lot of the foundations on education, employability, and the women causes in India. And Edelgive itself has now become an institution inside Edelweiss. So these have been our core mantras over the years, and in this we have done a lot of things. I must admit we have made a set of mistakes, we have missed opportunities, we have done stupid things. But over the period of time, by learning constantly, by having a culture of giving, investing back in the society, we've been able to build an organization that we are very proud of, and we think it's been only the first innings of the 25 years. We are very excited about the next 25 and the next 25 after that. So I think here, if I may pause and say, what have we learned, and what we have learned is what it takes in India. Because I wish I knew a lot of things I know now when we started Edelweiss, but I think it's been a journey. There's a lot of trial and error has gone in. We've made a lot of mistakes, a lot of assumptions. In fact, when we started, I thought capital markets in India is going to grow very rapidly. It's not grown very rapidly. Equity markets have grown, but the bond markets have not grown, but it's still grown in many parts beyond my imagination. In many other parts, not even what we imagined that has happened. And that is what happens in the world. A lot of unexpected upside happens, but what you assume also may not happen. So I think our approach has been to create value. So we don't look at price because stock price and valuations come and go. We all know, as somebody famous had said, the equity market is a voting machine in the short term, but a weighing machine in the long term. And we think in the long term, only thing that stays with you is value and not price. I think price will change every day, but value is forever. So, and we have a lot of ways in which we create value. We assess value. That are we creating value? We call it intrinsic value. So we look at all our businesses. Like to give you an idea, in our mutual fund business, we started that about 11, 12 years ago. For first 10 years, it didn't make any profit at all. But it built a fabulous platform with technology that in the last 5 years, the AUM has grown from 5,000 crore to 55,000 crore, more than 11 times in the last 4 years. But the idea is to build a platform, and while you are building value, you might not see profit, you might not see, market valuation, but you can clearly gauge, are you creating value? And you have to be very rigorous about it. So we have a lot of rigor. We don't get carried away with our own analysis, but we focus on saying, telling all our leaders, all our business heads, create value, and valuation will follow. And actually, valuation will change. It comes and goes, but value is always there for you. Then how you unlock value, how you capitalize on value, that is then your management capability. But first, you have to create value. And you can only create value by creating value for your customers, because what you build is the value you build for your clients. Part of that you are allowed to keep. And that is how all business works. Business works by adding value for your customers. And by adding that value, you can claim a part of that which becomes your value. The other has been to build for something that is very resilient, because in India shocks will come, and we use this word internally a lot. And I think after COVID last year, all of us have realized the human race, human beings can be very, very, very resilient. Can we bounce back when unexpected things happen, when setback happens? And as somebody very famous said, it's not how often do you fall, but it's how quickly can you get up, and how strongly can you get up, that is more important. So for us, resilience is a very important thing, because there will be business cycles. In my 31 years, I've seen more than five business cycles, and each one is very tough, very gut wrenching, very, very, very pessimistic outlook is there. But can you bounce back? Can you come back? And not only come back in a weaker form, but come back in a stronger form. And that is what is resilience. And we have internal framework on resilience, which includes capital and leadership, succession planning and building leaders and having redundancy, because redundancy is also very important for being able to bounce back. Because if you have spare resources, either people or capital, it's easier to bounce back. If you are stretched completely, then it's harder to bounce back when unexpected things happen to you. The other thing I've learned is the India story looks good, but it only looks good in the long term. In the short term, it's highly volatile. And in fact, I always say that India as as a as a postcard is very, very attractive. When you see India 25 years ago and you see India now, it looks a fabulous story. It's so obvious that how can we miss it? But if you see India on an everyday basis, the problems of 25 years ago, whether it's inflation, corruption, political stuff, all that going on, global uncertainty, global, US raising interest rate, global capital coming, going, those remain the same. And India, for various reasons, because we are still a young country, we are only 70 odd years, we are a young country, we are highly volatile in the short term. And the problem is the volatility of short term is not artificial. It is not something you can ignore. It is real. It hurts you, it can kill you also. So the short term volatility, but the long term opportunity, like to give you an idea, 25 years ago, the total deposit in the banking system in India was only 5 lakh crores. Today, the total deposit in the banking system is 150,000 crores. So from 5,000 to 150,000 is where we have gone. Almost 300 times the bank deposits have grown in India, from 5 lakh crores to 1.5 lakh crores. That has been the growth in India in the banking deposit, and it has been the same growth in insurance and mortgages and asset management and mutual fund and all that. India has compounded at between about 15 to 18% a year in various categories of financial services. There have been periods, like I remember 96 to 90, it was a very bad period. If you remember that time, there was a lot of crisis, a lot of NBFCs closed down, there was an Asian financial crisis, all of that. Then after 2001, 2, 3 also was a very bad time in India. We had two droughts, a lot of high bank NPAs and all were there. Then 2008, 9, 10 was bad. Then 2013, 14 was again bad. And the last 2 years also. So there are really very, very gut-wrenching short-term cycles in India. But on a long-term basis, if you look at it on a point-to-point basis, It is very attractive. So we call it having a bifocal vision. You need, God has given us two eyes. We need to keep one eye on the short term and the other eye on the long term. And you only able to manage. If you see only the long term, you will stumble in the short term and it will be very harmful and it could be destructive also. If you look at only the short term, you will miss the long term opportunity. And how do we use our two eyes to be able to see the long term and the short term at the same time and manage the volatility? You can't play the volatility, you have to manage it. You have to but you have to play the long-term trend. The long-term trend is, as I said, 15 to 18% growth rate. The short-term volatility is gut wrenching up and down. As I think, as recently as in the last 2 3 years with the ILFS, liquidity crisis and the COVID that happened after that. Last 2 3 years have been highly volatile. I mean, not just stock market volatility. I'm talking about business, business volatility. And it happens in India. A lot of the volatility is natural business cycle. Some is created by change in rules and regulation, like the Supreme Court will cancel telecom licenses, the Supreme Court will cancel coal mine, and that creates business uncertainty and volatility. And that is part and parcel of India. It's part and parcel of every emerging market. But because we are a young country, the US is more than 250 years old, almost 250 years old. Other countries have evolved, and our economy is only 25 years old in this shape after the economic reforms of 1992. So we are still a very young country. And because we are a young country, we are constantly evolving. The rules are changing. And as you can see, even tax, I think every year the rules change. So the short term changes and the volatility, but the long term opportunity, marrying the two, bringing them together is actually one of the best way to capitalize on India on a long term. And if you really want, and whether it's an Indian company or a foreign company, I think taking a long term view in India is the only way to compound. In the short term, and I've seen, we advise a lot of companies from overseas who come to India, they expect to capitalize on this very obvious opportunity of India in the next 5 years. And after 5 years, they get tired. After 5 years, they come and say, but nothing works in India. And we say, yeah, because you need to spend 20 years just understanding India. So whether you look at companies like Hindustan Unilever, to the banks in India, the foreign banks in India, to even companies like Coca-Cola, Pepsi, they have all spent 20, 30 years in India already. And nobody in India really can capitalize on the India opportunity unless you take the long term. So if you take the long term view, India is a great place to play. If you want to play India for the short term, if you have a 5, 10 year view, and this is as applicable for Indian companies as with foreign companies. So we have a rule in Edelweiss that when you start any business, say, I want to be in this business for the next 25 years. And only when you can take that view, you will be able to overcome the short term. Like one last example I would like to give. In 2012, we started our insurance business, and we got a Japanese partner, Tokyo Marine. They and we together have invested 2,000 crores in this business. 2012 was actually the first point of time to start the insurance business, because in the next 5 years, a lot of rules change. IRDA reduced the commissions on on ULIPs and all that, and the economics of the business completely changed in the next 5 years. From 2012 to 2016-17 was a very difficult time for the business, but the last 4 years have been fabulous time for the business. But unless you have a 25-year view, and we are very fortunate. Our partner, Tokyo Marine, is a 150-year-old company. So they've been in business for 150 years. So having a partner who's been 150 years, I think your 20 years looks very short term in that context. So I think that long term and getting the compounding of India, if the growth rate is even 14-15% in financial services, over the next 25 years, there is a lot of opportunity out there. I think everybody will build businesses, create value, be rich. I think I've always believed in India in the long term, everybody will get paid off, but only in the long term. In the short term, it's very hard to make it work because uncertainty happens. You will make mistakes, all of that. In the long term, even your mistakes, you can correct them. In the long term, the opportunities will also come a lot more your way. So, India is a long marathon, it is not a sprint. And when you run a 42-kilometer marathon, how you ran the first 5 kilometers is unimportant. How you run the last 5 kilometers is very important. So we do say that treat India as a marathon and not as a sprint. Like in my own experience of having run a few marathons, most important is not to run as fast as you can. Most important is to keep your endurance, keep your energy, and keep running for the long term. And ideally, if you can run your first kilometer and your 42nd kilometer in the same way, that is the best thing that can happen to you. So, friends, with that, I come broadly to the last slide in this presentation. And here I say that finally, anybody who wants to build wealth in India, anybody who wants to build business in India, anybody who wants to play the India opportunity, you have to believe in India. You have to believe in India in good times, in bad times. There are times like 4 or 5 months ago when COVID wave 2 was there, even the die-hard India believers in terms of foreign investors, they started losing faith in India. And I've seen that over my last 25 years, I've dealt with a lot of foreign investors, and even the true believers of India at times will start losing faith in India. And that has been always there. And that is what I find, that having a consistent belief, and the belief in India is not blind belief, it's not blind faith, it's knowing the plus and minuses of India, knowing this, like I said, there is a lot of volatility and tinkering and short-term change and all of that. So we have our own issues, but within that, we also have our own opportunity. India can be a challenge, but India can be a much bigger opportunity if you overcome the challenge. But you have to overcome the challenges. India is not an opportunity without challenges. But if you believe in India, I think on the long term, there is, even today, from where we are today, I think the next 25 years is a very exciting journey ahead of us. So, with that, friends, thank you very much again for this opportunity, for this honor to be able to come in front of you and share our experiences and our view on India. Thank you very much.
But we'd like to request the participants to raise questions, whichever they would like to ask. Mr. Rashesh Shah is there to answer your questions. Well, one question I already have in my chat box. So, Mr. Dilip Shah is asking, which are the sunrise sectors and where does India have an edge in becoming a global player?
I think there are quite a few sectors in India, like even textiles, which is very labor intensive. I think India still has a lot of headroom. It will need, obviously, government areas. I think India has two or three advantages. I think our manpower is one big advantage that we have. So any industry, whether it's software, whether it's textiles, so wherever manpower is there, it's a big opportunity. So even staffing services, those companies are doing well. So I think using India's manpower, either for India's needs or for global needs, is one big advantage we have. The other big advantage we have is our consumer market. I think India is getting urbanized. A lot of consumption is happening in purchase of buying products of good brands, and also FMCG or consumer products is a big one. India still doesn't have the kind of plants that we will have in the next 20 years. And we are seeing that in many, I think in the last 20 years, I've seen even in things things like firing and lighting happens at Cisco and all have got started. We are seeing a lot of opportunities in that. So any B2C opportunity, any business to consumer opportunity, which is brand dependent, where you can build a brand. And again, it takes you 20, 30 years to build a brand. But I think it's a great opportunity to build a branded services or branded products for India, because India is a large consumption market. I mean, at a $3 trillion economy, consumption is close to $2 trillion. That makes us a large market. The way we are getting urbanized, whether it's from retailing to online, I think the consumer market in India is also very big. That is obviously the obvious ones like healthcare and all are there. And fourth, obviously, I must say this, financial services. I think India is a country of savers, but we are still not a country of investors. We save a lot. India's gross domestic saving is close to 30% of our economy. So we save a lot of money, but we don't invest it. And as you all know, as individuals, if you save money and just keep it in the bank earning 3%, the wealth of the family will not grow. We have to take that and invest it smartly, wisely for the long term. But if we invest it smartly, wisely for the long term, I think the wealth building process can be faster. And India needs to go from a country of savers to a country of investors. And there is where opportunity in financial services, whether it is banking, insurance, mutual fund, all of that also come. So I think these are the few areas where there are still a lot of greenfield opportunities. Even today, financial services, a lot of greenfields will start. September, I think we are seeing new brands getting started all the time, new services being offered all the time. And the third, as I said, I think things like uh, textiles and wherever we can use the Indian manpower, that will be a very powerful.
Uh, I have a question. Uh, you have said that you have large workforce and you have suffered lot of setbacks in last 25 years or so since you started your journey. In what way you could motivate the employees, because motivation of employees and the workforce is so important, as you have yourself said that the human resources are key to the growth of any organization. So in what way you were able to raise the morale of the officers? We sometimes come across in the department that the morale is shattering, and so what can be the ways and means through which we can raise the morale of the employees, the large workforce of the department, any organization maybe?
True, but that's an important question, and I do feel that managers and leaders have to worry about it. We always say that you are any good leader is also a good HR manager in that sense. I will answer this in two parts. I think the one is in normal course. What I have learned over my 25 years is actually when you hire people, their needs are fairly simple. And at least in Edelweiss, we have said there are four needs that people have when they are looking to us as an employer. And can be offered this in a good measure. One is what we call fair compensation. It has to be fair. Compensation doesn't have to be like this.
बताइए मैंने coordination में बता दिया.
But can we offer a fair compensation to people, which is, comparable. So we emphasize fair compensation, but not the highest compensation. Then we work environment has little politics and backbiting and uncertainty and reading between the lines and all of that. We try to avoid that, and our culture we have built on that basis. And I always say that if there is ever politics in Edelweiss, it will start with me, because it's the senior leaders who start the culture of the. So we try to maintain a clean, straightforward culture. We have very hard conversations, but we try to keep politics and others as low as possible, and have a clean value system, have very clear, guidelines on what is accepted, what is not accepted. What they want is they want growth. They want, as I said, people have to learn. We constantly invest, encourage people to grow, expand their horizons, all of that. They want to grow. I think I've not met any human being who does not grow. Growth is very intrinsic in human beings. So the third is growth. And fourth is they want respect and appreciation for them. Everybody feels their work is important. Everybody should feel their working. The liftman in the office, to the receptionist, the, the desk, and the reception, they all of their work is important. And we try to create a culture where all of that is also important. That we give the respect in the right way to even the person who brings the tea for you in your room. Because if you, everybody wants respect, whether it is a peon or it is a chatter. Everybody wants. So human beings want respect, they want fair compensation, they want to grow, and they want to not have the stress of constantly trying to figure out who's stabbing me in the back. So we in Edelweiss try to offer these four things as a consistent offering that is there. And this is what we promise to our customers, that we'll offer these four things. And like as I keep on repeating, we say fair compensation, not highest compensation or the best compensation. We are not the best paymasters in the industry, but we are a fair paymaster. And we emphasize the fairness part. The second part of this question is, all this is enough, but in crisis, you have to do more. In crisis, when things are going bad.
Sir, sorry to interrupt, sir. Voice quality is very poor,
You can
sir.
go a little bit
Able to
slow
listen for
because
last 5-10 minutes.
Oh, sorry. Can you hear me now? Is this okay?
Some disturbance is there.
yes, so now again we can go a little slow, sir, because voice is breaking from your side. We can hear the other participants, but from your side the voice is breaking, sir.
I'll try and see whether. I see my speaker has got changed. I think.
Can anybody change the microphone of Rashesh Shah, sir?
Hello. Can you hear me? Hello. Hello.
I think it's better now.
Yes, sir. Now you can try again, sir.
Yeah. Okay. Is it okay now?
Yes.
Now it's okay, sir.
Okay. Okay.
Yes, sir.
I just changed my speaker.
Sir, on the last question itself, can we get another, summarized answer perhaps?
Yeah. Yeah. So what I was saying is, what I've learned in my last 25 years is there are usually four things that we offer to people, and usually this is good enough for employees who want to have a long-term career. One has been they want fair compensation. Second, they want to work in a clean environment with no politics and backbiting and all. Third is they want to grow, and fourth is they want respect for the work they do, whether it's a receptionist or the secretary in the office. And we in Edelweiss say that these are the four things we'll offer. And as I keep on repeating, we always say fair compensation, not highest compensation. We'll give you fair compensation, but we'll also give you a lot of respect. We'll give you a lot of opportunities to grow, and we will try and have a clean environment with no politics. I say that usually politics starts from the top. So if there is ever politics in Edelweiss, it would have started from me, is what I tell people. But as I said, this is for normal times. When there is crisis and all, you need to do a little bit more. And in crisis time, what we do is a lot of communication, a lot of transparently telling people what we are doing to manage the crisis, how will we go forward, what is, because I've seen human beings like to look forward. They have hope, they have faith, so they need to be communicated. And I think one of the things we miss out in a crisis, I realized you have to communicate 3 or 4 times as much. So we do a lot. We give a lot of the feedback to people. I think that is one thing organizations don't do well. They don't tell people what is working, what is not working. They don't share perspective with employees. So in Edelweiss, any leader, communication is a very important aspect. You have to communicate a lot with your people, good, bad, ugly. So in crisis, we have found communication is the best way to motivate people because people want to know what we are doing, but they have a lot of hope and faith. I think skepticism, cynicism is there, but usually you can overcome skepticism, cynicism through honest and transparent communication.
May I
Mrs.
ask a
Sita
question?
Srivastava has a question. Yeah, please go ahead. Yes, sir. Please ask a question, sir.
Good afternoon, sir. Taking the question that our PDJIT sir has just asked, you had talked about EQ and IQ of all the employees. Uh, Normally, they are inducted after graduation and post graduation, and formative years are already over. Normally, there is no tectonic shift in thinking per se. Do you measure EQ and IQ both in a very scalable manner so that you know what kind of a person you are recruiting and does he fit in your jigsaw puzzle?
So it's very hard to assess EQ at the recruitment stage. I must be honest enough to admit that. EQ is something that you experience. But I think people can learn. I think even people who are 40 years and 50 years old, I mean, I have learned a lot. I myself have learned more EQ in my last 25 years than in my even in my MBA school or before that. I think a lot of this can be learned. A lot of this can be through coaching and through and people also realize. I think we all realize a lot more. We have much higher EQ when we are 45, 50 years old than we are 25 years old. So I think part of that is human evolution, but part of that is also organizations investing in that. And most of the leaders and managers realize that if they need to perform their duty, if they need to be successful, EQ allows them to be. See, IQ is very important when you are a lone worker, when you are only work. So if you are an entry level analyst and you are not managing a team, IQ is enough. But the moment you have three other people with whom you have to work, the moment you are in charge of a group, the moment you become a team leader, a department head, EQ, the moment you have to deal with clients, EQ becomes very important. And that people also realize. So I think part of that is people realize it as part of their job growth itself, and then the organization helps them and complements it and supplements it. I must agree with you. For some people, it's easier. Some people have so much background or the programming of their early years that EQ is much harder to learn. But I think almost everybody, no matter what their starting point, can grow on the EQ channel quite a bit if intervention is made and if they are taught how to do it, like things like empathy and self-awareness. So we do a lot of things on diversity, and not diversity in terms of male and female and other diversity, but that people are different, styles are different. Some people are very intuitive, some people are very process oriented. Both are required for the organization. So we train people to enjoy the heterogeneity and how to make sure that a jigsaw puzzle does not have all the puzzles as square tiles. A square tiles will not build a great outcome. But a jigsaw puzzle, which is uneven on many sides, and we as human beings are very uneven in many ways. But if you fit the uneven people together, the fit is much stronger, and that is what we try to do.
Okay, anybody else? Mr. Harish Kumar, your hand is raised, sir. All right, sir. I would like to primarily tell you that at least as far as we are concerned at the DTRTI Lucknow, we are extremely benefited by your team and your efforts, whichever efforts, the efforts that you have put up.
Arvind, I'm just interrupting you. There is some question in the chat box. Please just have a look at it.
Yes, we had raised one question, but okay, sir. Another question that has been asked by Mr. Dilip Shah. He's asking that for a salaried employee, what are your suggestions in making investment in equities since the interest rates are decreasing on a daily basis? So where does the normal investor go who invests in bank deposits or something like that?
So I think every individual should have a mix of all kinds of investment. I don't think one investment is always very superior to others, because your investment should be guided by your needs and not by the returns only. Like for example, I think every individual should first have some money in the bank, which is what we call your emergency money, your liquidity money for emergencies and all that. So I think that is very important. You should not put that in equity markets or any other instrument, because that is your emergency money and we need to keep some of them. The other is, if you have a chance to buy a home, and I think you should invest in that, because even that is not about getting the highest possible return, but that is like investing in the home, like investing in your kids' education. All of those are the I think the first things you have to get out of the way. After that, if you have extra money, then you have two needs. One is to plan for retirement. And if you want to plan for retirement, I think equities is a very good instrument, because over a longer term, equities will give you 14-15% return. But the best way to invest in equity is to invest on a a systematic basis every month, because sometimes markets will be good, sometimes they'll be bad. But if you consistently invest, whatever you invest, you will get about 14 to 13 to 14% return, has historically been there. And there are various ways of calculating. If India's GDP, nominal GDP is 10 to 11%, corporate earnings will grow at 12 to 13%, and equity markets will give you that kind of returns. But for that, you have to have the minimum 5 to 10 year horizon. So any money that you need in the short term, before 3 years or 5 years, you should not put it in that. But if you can keep the money away for 5, 10, 15, 20 years, equity markets is a very good instrument. In fact, that money you should keep it. So if you have really short-term money which you need in the next week or next month or the next 3 months or emergencies, you should not put that in equity market. You should keep that in a bank. And the other, on a long-term basis, first you should invest in a house, and after investing in a house, whatever you have, you should invest in the equity markets. Everybody should have an equity portfolio, but everybody should have it on the long term. I think there is no benefit of trying to trade in the market and getting short term in and out, because that is entertainment, but that is not investing. It's a lot of entertainment.
Question has been raised by Mr. Harish Kumar and Mr. Vipul Kashyap that, sir, please tell us about the bitcoins and about investment in bitcoins.
So I think Bitcoin is the closest it comes to gold. So as we know, any currency, any money has got two primary uses. One is store of value, and the other is a transaction value. We use money for storing value, and we use money for buying and selling goods. I think I think gold used to be that. Now Bitcoin has also become that, because there is a fear that the currencies, the fiat currencies like the rupee and the dollar and all, are all going to get debased because of the lot of printing that has happened in the last couple of years. I do think the current phase of Bitcoin seems to be a lot more speculative on that theme. Eventually, I think there will be cryptocurrencies. So when you say Bitcoin, I don't know whether Bitcoin is like gold, and like gold, the prices will keep on going up and down depending on the fancies and all that. But eventually, cryptocurrencies are here to stay. But the cryptocurrencies will replace the normal currencies. And I think almost all governments in the next 8, 10 years will introduce some cryptocurrency, because that has now become the new currency. So cryptocurrency will replace old currencies. But I think Bitcoin is very hard to say how long this euphoria will last, because it's like gold. So I think, like investing in gold, you are investing in Bitcoin effectively.
Yeah, I have one question. Uh, what is like India is focusing on ease of doing business to attract a lot of investments, and government is committed to that and focusing on ease of doing business. So what is your view on the overall working with the government? You must have been interacting with the government, and you are also in contact with the foreign investors. In what way India can improve, and more importantly, the tax department can improve on the side of ease of doing business? Any thoughts, any comments?
Yeah, I think a lot of foreigners, obviously, they get all attracted to the India opportunity. And I think the India opportunity is huge. And it is one of the last countries in the world where there is such a large size, scale, and opportunity for the next 20 years. So foreigners will come to India, but most of them find India a very difficult and complicated place to work in. And that is a constant complaint they make, that India is very difficult, complicated. Partly it is the way we are structured. There are state governments and central government, and then there are a lot of different laws and ambiguity and all of that is there. I think the one thing people don't mind, they don't mind higher tax rate. What they mind is uncertainty, ambiguity, and I think the arbitrariness. So what I hear from a lot of foreigners again and again is, okay, ease of doing business, maybe cost of doing business in India is high if the tax rates are high. But if there is certainty, then it's easier. What they don't like, no investor in the world wants, is uncertainty, ambiguity, and arbitrariness. And the only part of India, I mean, I don't think we need to change a lot, because, as I said, we are a very attractive market. But if we can be more consistent, more clear, more non-arbitrary in that A is A and B is B, and there is no doubt on that. I think it will become. I think the investment will just double from here, because everybody says India is a great opportunity, but it's too difficult a place to work in, and that's the constant crib most of the investors have. It's too complicated, too complex, too uncertain, and things just drag on for years and years. So I think a lot of clarity, reduction in ambiguity will be a good thing for us to offer along with ease of doing business.
Thank you.
So I would like to thank you for having been with us and having your team to be working with us to organize this training program also. Your people headed by Mr. Arvind Kumar have been working midnight oil. I think Mr. Arvind Kumar sleeps for 2 days and is awake for another 2 days. And how he's doing that, I mean, it's beyond me to understand. But it's marvelous, sir. And in 25 years, you have done this. But this is totally unimaginable. And it's certainly kudos to you, sir. You have understood the business, you have understood the people. And that is why you have come to this level. And most of all, you have studied from IIM Ahmedabad. And a person who has been in the educational line, he has studied properly and then gone into business and then made such a big business out of it. 8,000 crores is a huge amount. I mean, it's unimaginable. It's a big story for all of us, and you are a guiding light for many people who would like to do something in their life. So I would like to thank you a great deal for having come and accepted our invitation for to address the participants, the senior officers of our department. And I'm sure that we have lots of questions, lots and lots of questions for you, but we'll keep them for the next time and hope to have this journey together with you in the future also. So thank you so much, sir.
Thank you very much. Thank you. It was excellent session, very interactive, and I really enjoyed every moment of it. Thank you very much for this opportunity.
Thank you.
All the best.
Just one suggestion in lighter way, and Rashesh ji, since UQ you are focusing a lot, you can call it just a lighter way, one suggestion kind of thing.
Thank you. Thank you.